Hello, hello, and welcome to June 7th. Alphas KR now takes the lead with 37%. And there it is, KR 37. SLB fell back from its 56% advantage yesterday, but they're running in both in positive territory. That's what counts here. And the account did suffer a fallback to 7,077. So let's go ahead and review. Remember, we are in a 3-to-1 ratio trade. This is the Elvis Shift, which is our exits for this month. And we can go ahead and get the crossbars out of the way, makes it a little cleaner to see. Okay, so we have initiated rule number 1. That is, the price has cleared the gantry. See, the price was here at 37.25, and then on here on June 3rd, it cleared. What I say, cleared the gantry. That is, even the tail is even not in the picture, touching the entry price of 37.25, and now our stop is at 37.25. So that is where we initiated rule number 1 of the exits. And now we're waiting to see if price will touch the third ratio. We can take profit at the third ratio, or if we hit ROI 100 first. We hit ROI 100 first, we'll go to last bar low. And if we hit ROI 150, we go to last bar close. And at 30 days into the trade, so this trade initiated on June 1st. So June 1st is right there. There's June 1st. So on July 1st, if we are not out of this trade and making money, we will then go to dipper low. Dipper low would be right here. It's a little hard to see. Let me stretch this out so you can see a little bit clearer. Dipper low means that we will then set up our exit to the dipper low. High on the left, low in the center, high on the right, and that's your dipper low, and we will be going here unless a dipper low reoccurs up here after July 1st. And if we get into August 1st and the trade is still not cleared, we will then go to last bar low and get out of this trade. Remember that the longer we're into a options trade, we are suffering time decay. That's where you'll find a lot of equity traders, especially portfolio managers, do not like options because of time decay. But then there are traders in the portfolio management field that do know how to make options work for them and work for their clients. All right, so now we have reviewed the 6 rules of exit here for the SOT. This is the Stochastic Trending Scanner. So let's rewind, let's go quickly view on what that means. That means that stochastics is rising. Stochastics is rising. And the RSI is rising. And the histogram, MACD histogram, is rising. That's the histogram, not the value line. Now, the trending scanner means that the 10 EMA, which is this gold line you see right here, is also in the uptrend. So those 4 conditions must be met before we go and look at the candle. And that occurred here on May 25th, May 28th. Let's go look at something. We can go here, view trades. And the trade was initiated on June 1st, which means therefore we set this trade up here. All the conditions were met on this candle. Also, too, the candle that the close is greater than the open. We have a green candle because we're going into we want a surety of going into the right of the trend. Yes, there are some times that you get a red candle. All these guys will line up and you might get a red candle, and then the call entry is very far away from the actual cost of the option, which means therefore you're open for the possibility of slippage. Another route is you can also take it off the red candle. You can take the entry of the call off the close of the red candle, which would be at the bottom of the candle, which means the option would be slightly cheaper than the top of the candle, but you're taking in a risk that that's not acceptable to me, and that is that you get triggered because you're on the close of the candle, and that's like this red candle, and then it comes and retreats and comes back and takes you out for the day. So those are things that have to be in consideration of the trading plan. This trading plan is stochastic strategy. You are seeing it as it is. I am not doing that. I am going on green candle only. I want all the assurity that I'm in the right direction with the high probability that the trade is going to work out. As you can see, we have two trades already for the stochastic trending scanner for this month, and it's only the 7th day of June, and we are 37% each on the position um, for the alpha account. So that's a review. There is the conditions, and then what is your out? What's your first stop? Your first exit would be if this was based off this high, the exit was based off this dipper low right here. Your dipper low, or yeah, the dipper low right here. The dipper low right here was the exit that we took off, and that becomes a 3-to-1 ratio. Then we wait for price to clear the gantry, as I would say, clear the entry point, which occurred here on this day for Cougar, and then we move the stop to 37.25. So if we get taken out of this trade, we get taken out of this trade with the slightest, smallest risk management as possible. The key to successful trading is not how big your winners are, but how you control your risk. Because if you have big winners and you also have big losers at the end of the day, the net is still zero or negative. So what you want is you want have to take 100 small losses and end up with 5 or 6 big winners, and those 5 big winners do pay off those small losses and leave you a chunk of change that your account grows. The game here is this must grow. This is the account size. This account started at 5533. We're now at 7,000. So we're about $1,500, a little less under $1,500 ahead. We'll do the numbers very shortly for the SPY. Okay, so let's go on now to Seibel, which was Schimberger, which was the leader of the pack until today. And they also remember we got our entry right here. Our entry was on June 1st, which is right there. We got in here we got triggered in the trade here, and we cleared the gantry there, and the stop now is at the entry point. And at the entry point, I failed to mention, but the entry point was the entry point of the trade. So this actually has to be now taken that this opened at 33.39. So we got filled at 33.39. So now the 3-to-1 has to be adjusted also to reflect reality. Okay, there it is. And now our target, a 3-to-1 target, that's 40.56, which will have to be adjusted. So there was a rule change in the middle of the stream. I apologize for that, but when consulting with my uh, senior fellows to say, sure, you set the trade up here, but you had a gap. That gap is still going to be risk management. So our stop will go to 33.39. So we got only so many minutes left. So let's go here and do this. We're going to go ahead and turn on the order bubble. Come here to the order bubble. Come down, cancel replace. Come to the small gear on the right. Come here to the entry price that we want to put in. The entry price is 33.39. There's no buffer. That is the entry, and that becomes the stop. And now we got at 33.39. We have a possible profit of $1,000, which we'll see if that happens, and then send it to market. So now our stop is here. We'll confirm the bubble. The bubble says yes, 33.39, 33.39, 33.39 on the open, and that is it. Remember, when you want to get rid of this bubble off your screen, do not click on the X. That will close the trade. You want to take it here, show orders, turn that off, and now the bubble's gone. Okay, in the closing seconds, let's do the numbers. Okay, so we have 70, 77 minus the 55.53, which was the benchmark starting on January 1st, and then that is divided by the 55.33. It's the benchmark as a percentage, and we are at 27.9%. And where is the SPY? The SPY is at 5.3, 12.3. We are still double the SPY. And with that we'll conclude today's report with June 7th, Alpha KR at 37 with a dead heat with SLB at 37 also. Thank you very much for stopping by and check it out. Bye-bye.